2020, among many other things, has been the year of the SPAC, the Special Purpose Acquisition Company. We have talked a lot about it on the show. We've talked to a lot of folks who have SPACs. We've talked to a lot of folks whose companies have been acquired by SPACs. And one of the things that's driven this trend has been that people are interested in investing in these companies with a lot of cash out there that people want to put to work. One of the people who's been watching that trend is David Gallagher. He's managing partner and co-founder at Wealthspring Capital. And I imagine a lot of your clients have been asking a lot of questions about SPACs this year. What have they been asking you, and what have you been telling them? What are sort of the top questions that you get?
Yeah, sure. Well, thanks for having me on. 2020 has been the year of the SPAC, if you will. We've seen SPAC issuance explode this year from about $13.5 billion last year to $80 billion this year. And I guess the most common question that we're getting from our investors is, how far can this go, and how big is this market going to get?
And what do you tell them?
And David, I guess, yeah, go ahead, Jill.
What are you telling them, David, when they ask you that?
Yeah. So look, 2020 has been obviously a big year in SPACs, and it's hit on some of the. That's because we've hit on some of the real trends that are out there. We've had a low yield environment where it's not costing investors a lot of money to park their cash in these vehicles, while these sponsor teams go out and search for these exciting companies that they're buying. This year, I think about 45% of all IPO issuance has been in the realm of SPACs. So it's been a big theme in the markets, if you will. Goldman Sachs actually just came out with a piece where they said next year we could see upwards of $300 billion of issuance in SPACs. And we completely agree with that. I think there's a real opportunity here as the economics are very, very favorable for sponsors right now. And we're really broadening the investor base of the SPAC product.
David, how concerned are you about these vehicles and sort of what they mean for market sentiment? I mean, all financial innovation, eventually levels out, I guess, over time. But certainly this has come up quite quickly this year.
Absolutely. SPACs, you can say, are having a moment in the markets, if you will. And they are getting a lot of press in a way because they're buying these exciting small cap companies. But the actual SPAC structure, I don't think is particularly well understood right now, in the sense that SPACs come with an embedded put option where investors have the right to ask for their money back instead of being part of the combined company. And that gives you a lot of downside protection while still effectively owning a call option, which is the upside of these companies that they're buying should they choose to participate in the deal. It's really a very exciting structure that's gaining a lot of traction in the marketplace right now.
What has been some of your thoughts as you go through the filings on these SPACs? When you see some of these really aggressive targets, I'm not sure about you, but for me, I can't help but to laugh to see companies projecting they're going to go from zero revenue this year, and in 5 years, they're making billions of dollars. Don't you think those targets, some of these targets we're seeing on these SPACs are absurd? And then why isn't the SEC coming in here and cracking down on this?
Well, again, certainly I think you're speaking more broadly to the equity markets overall and the valuations. And it's clear that some of the macroeconomic factors, whether it's the Fed buying, has pushed us into the 99th percentile valuations, if you will, across the equity market. And you're seeing investors chase growth at any price. And that's feeding into the SPAC market. It's feeding into all markets, if you will, in the equity world. Again, I would point to the fact that SPACs have their monies invested in treasury bills while they're out there searching. And should you find if you're uncomfortable, if you will, with the company they're buying and the revenue projections, you always have the right to ask for your money back, or you can actually just sell your shares in the open market. So I don't see the SEC cracking down, if you will, on the SPAC structures in so much as that they're concerned about valuations overall in the marketplace.
And when you're thinking about SPACs, first of all, do you consider them to be sort of a separate asset class? And do you compare them with IPOs, for example, or do you just kind of look at them on the merits of themselves and the companies that they're buying and try to apply the same criteria you would to any other equity?
Well, let me speak to what we're doing for our investors here at Wealthspring, because that's the lens we look at the SPAC market through. And, with that lens, our investors, like many investors of high net wealth individuals, family offices, RIAs, are looking at a cash conundrum where equity valuations are high, rates are low. What do you do with your cash? How do you invest your money right now, which is a common problem we're all facing. And we're solving that problem with SPACs. We're looking at SPACs as a cash management alternative where you have this put option that protects you on the downside while allowing you to give the upside. So when we look at SPACs, we're using them as a tool to solve this cash problem. Obviously, there's a lot more deals this year in the SPAC market than there were last year, which creates more opportunity for us to run bigger, better diversified portfolios and deploy more capital into the space. So that's the lens we're looking at it through, and I think that's the lens that a lot of folks are looking at as a way to deliver upside while still protecting your downside, if you will.
All right, David, thanks for being here. Appreciate it. David Gallagher is a managing partner and co-founder at Wealthspring Capital, talking to us about the SPAC boom that we have seen this year. Thanks so much, David.